Welcome back. This is Closing Trades and clear fervor within the broader universe. Checking in on the mid-cap index, up 2%. Small caps as well, holding out by 2.5%. Dish TV is rallying. India Bulls Housing having a terrific run. You've got Philips Carbon, Sri Renuka, Kolte Patil. Take a look at NCC, up nearly 8%. Vedanta, eClerx, South Indian Bank, and SpiceJet seeing some reprieve in trade. Daljeet Singh Kohli with us on the show. And Daljeet, let's get in your view then as to how you're looking at the entire IT basket, owing to the fact that it's clearly buzzing in today's trading session as some of these IT heavyweights have clocked in some multi-year deals. How are you looking at the overall innovation, IT infrastructure transformation within this space?
I think we are very positive on the entire sector. For a long time, we have been maintaining a positive view on the all large, mid, small cap IT companies. It is the sector probably which has the best visibility of earnings for the next 1 year, which has the least risk to those earnings also. So obviously that is what is driving the stock prices. And on top of it, we have seen that this multi-billion-dollar deals with large organizations. I think this new trend, which is by the MNCs to start monetizing their captives, that is a very, very good indication that there are a lot more of such deals can come through. And once most of these MNCs decide that they want to actually monetize their captive, then who is the best who can take this opportunity? I think it will be the Indian IT. So all these large cap companies are in for a good time. We in all our screeners for last so many months, IT has been always on the top. So we are quite overweight on this sector in our all the various portfolios. We have all types of IT. It's large cap, Infi, HCL Tech, TCS, all are there. On the mid cap, LTI, LTTS, even Mindtree, they're all there in the portfolio. So we are positive on all these stocks.
As well, to just understand your take when it comes to the white goods space, because we did see that overall festive season, and then we saw that news about the shortages and some of the products, etc. Ever since Diwali, are you looking at the space and the sector a little bit more favorably? Do you believe that we are likely to see further traction, given that themes like work from home, etc., are here to stay? So a lot of these devices will now continue to remain in demand. And share with us any preferences that you have.
Looking this theme as a very constructive way, we feel that there is a lot of demand likely to come in this sector, and especially in air conditioning, in ancillary to air conditioning, like companies like Ember. We are very positive on that. In fact, we were just deciding on our list for top 10 stocks for 2021. So I guess at least 2 of them will be from this sector. Just now we have not released the report, so I can't tell you the names. But there are 2 stocks from this sector. What we believe is that this pent-up demand plus the seasonality, which will play in favor of most of these companies. And we have seen that first quarter which was the most important season for them, that has been a washout. So I think all that demand will come back in this quarter or next quarter when the season again comes back. So these companies are poised to take that advantage. And good part is that stocks also, though market is at the peak, but these stocks, these are also at peak, but they are not at obscene valuation. So you have that visibility of earning, you have the comfort of valuation, good quality at a reasonable price, you can say. So it makes good sense to have them in your portfolio.
Just looking at what the other buzzers in the market are besides IT, Idea as well has lapped up quite a bit of gains, holding up 10% as we speak right now. Even yesterday you saw good move on Bharti, and I think today as well Bharti has been a mover. Let's just revisit what Bharti is currently up to in trade. Kunal, any trading opportunity here, and in particular this big move that you're seeing in Idea?
I think both these stocks are looking attractive, and I think Idea particularly, I think, is looking more swifter in terms of price move. I think the stock has been lying low for last 2-3 months. It's remained sideways. Yesterday, or I think day before, when the correction happened for overall markets, Idea touched back to its 50-day moving average after trading above it for quite some time. So maybe that mean reversion process for Idea is also likely over, and I think both these stocks are looking attractive. If I have to take a trade, I think for Idea, I would probably place a target range closer to 12.5 or 13 rupees from current levels. So the move looks more stronger in Idea purely based on the the percentage up move expected from current levels. For Bharti as well, I think it's a very strong move which you're seeing, because the stock is clearly changing its floor from a 400 level a few months back. The stock is gradually trying to pivot around the 500 mark. I believe once this transition is over for the stock price, once the buyers get accustomed towards the 500 odd price for Bharti Airtel, I think this stock will also try and come back again quite strongly. So I think both these stocks are looking attractive, but purely from a trading play, given the momentum and the short-term setup, I would probably prefer Idea for the next couple of days at least.
Daljeet, how would you approach aviation multiplex names now? Because of the panic around the new strain of the virus, these stocks are bound to be so, but have taken a hard hit. Finally seeing some signs for recovery coming in for Interglobe, at least holding up 3.6% as we speak right now. But do you sense that after this decline, these stocks can be bought, or would you say still be in wait and watch mode?
I would be in stay in wait and watch mode, mainly because two things. One, that from their lows, they have come up very well. So with last 2 days, whatever correction has been there, but that has been a bit shallow kind of correction. So that doesn't give you too much of the upside potential. Second thing is that although once they open up, they will reach their 95% capacity and all that, but their costs are something which needs to be worried about. Major cost is the fuel cost, and fuel cost is, again, we are seeing is inching upwards. So we will probably that kind. Even in the pre-COVID times when everything was normal, these guys were always dependent on the fuel cost. And anytime the crude will go up by $5, $10, they will have problem. So I think that is what is going to play out again in next few months. So that tactical play, which was that from their very low levels of Indigo at 800, 900, it has moved to 1500. That is over now. So I think from here onwards, we will wait for a substantial dip if we want to buy. But as of now, we are out of these both these stocks.
Okay, let's also get you an excerpt of a conversation with HP Ranina, who helped us understand the entire arbitration case at the ICJ that India has lost vis-a-vis Ken. He is of the view that the government should be bold in the matter and take a considered view going ahead. It should not look at taxation on investment in relation with any impact on FDI inflows. Listen in.
Up until now, we did see the Indian government making it very clear that we're open to more investments into the country. We're an investment-friendly country. We don't believe in tax terrorism. Yet we are seeing the Indian tax department really pursuing this demand. The Indian government still not being able to make up its mind on what to do, whether they should pursue the Vodafone matter as well in the International Court of Justice at The Hague once again and appeal against that matter. How do you see, on one hand, the Indian government trying to woo investments, on the other hand, the tax department still not walking the talk?
You see, there are two separate issues. Indian government wants investment. Every country wants investment in its own country. The issue is about taxation. Now, taxation in every country believes is a sovereign matter. If Parliament passes a law, then should that law be respected or not? That is the question. And whether the bilateral investment treaty was actually entered into to make sure that there's a level playing field between Indians and foreigners, and no discrimination is against foreign companies. Whereas taxation is a sovereign issue. It is passed by Parliament, the retrospective amendment. Now, what can the Indian government do? What can the Indian tax authorities do? They have to wait for that retrospective amendment to be withdrawn by the Indian Parliament. Unless the retrospective amendment is withdrawn by the Indian Parliament, the tax authorities have to do their job. They have to do their duties of implementing the law. And you can hardly call that tax terrorism. Implementing the law of the land is not tax terrorism. But the issue is, government has to take a stand whether they want to undo the retrospective amendment and sort out this issue.
Okay, we're going to take a quick break. We'll be back in just a minute, take you through some more of today's movers. Do stay tuned. Welcome back. Well, we've got IT that's on a tear today. A lot of action, particularly after those two mega deals that we've heard from Wipro and Infi. We've been talking about this, of course. Daljeet, let me also go across to Kunal for a look at the charts. Kunal, what's standing out? I mean, it's hard to miss an IT name today, and we've been discussing this for a while. And given that we've already seen such a strong run-up across most of them, where are you still seeing potential?
So I think if we talk of the large cap names, I still believe Wipro is one of the stock which has which looks extremely strong. And there's this very interesting technical pattern also for Wipro. I think a month and a half back, the stock had had a gap down opening from 377, 378 approximately towards 365. For almost the last 1.5 month, the stock had remained below that particular gap level, and it consolidated. And today, when the stock opened up higher, it opened up higher and tried to fill the entire gap, which generally indicates that this is an island kind of a pattern. These are technical terms, but this generally indicates that there is a strong buying force or a contra force which has now emerged into the stock price. So I, for one, believe that Wipro should be the one which should lead up higher from current levels. It's approximately at 380 levels, so I would expect the stock to cross past the 400 pretty soon. Even Infosys, for that matter, I think has gained a lot of strength. Yesterday, the stock closed at the highest point of the day. Today also, when the stock opened up higher, the fact that these stocks are seeing a follow through, I believe even Infosys from current levels could head back towards a fresh highs for itself. 1300, 1330 levels could be a fair possibility. And I think the bigger outperformance, or the biggest set of outperformance, could probably be achieved if someone is looking at the mid cap end of the market as well. Look at charts like Mindtree, Coforge. I think even these stocks, rather both of them, are looking fairly attractive. Last 2 days we've seen momentum, but we've seen the nature and the habit of these stocks that when they tend to come out of consolidations, these rallies are not just ferocious, but they are consecutive for multi-days kind of rallies into these stocks. So I think it has to it now has to depend on the appetite, the risk appetite, and the patience level of each investor. If someone wants to stick on to the large cap names, I would still expect Wipro and Infosys to do pretty well for themselves. From the mid-cap end of the market, I believe Mindtree and Coforge could be the ones should be looked at.
Daljeet, what about real estate? We've got Godrej back on the move today. DLF has been steadily moving, and across the board, it seems to be a consistent theme now.
See, on real estate, I think the first round of move has already happened, mainly because suddenly all the state governments started giving some discounts on stamp duty, etc., and that pent-up demand has actually been there. Whether this will continue, we will have to wait for that. So I think we will have to wait for some more time. The first round is already over, so there is no point now getting at this. If somebody had bought at earlier levels or at the start of the day, can continue. But if one has missed that, then I think it is better to stay away, because I expect some cool off in this sector, mainly because the kind of numbers that we have seen in the last 2-3 months, they will probably not repeat in the next 3 months. Once this discount is gone, and now there was this lot of kind of binge buying. Everybody was waiting on the sidelines, and then the last 3 months they have all done. So what happens to the regular demand? Will that come back? How much it will come back? We will have to see in probably Jan to March quarter. I think we are out of the sector. We don't have any stock in our portfolios, and we'll remain away from it for some more time. Maybe next quarter, when the numbers start coming and there is a sustainability of those numbers, we'll look at it.
Kunal, let's get in a take on some of the buzzers within the broader universe. NCC, Indian Hotels, Piramal Enterprises come in on the charts.
So I think NCC is still, a stock which I believe, is trying to find its range again. It had I would say, a fantastic rally from those, sub 40 levels to almost touching 60 at one point of time, I think a couple of weeks back. And now the stock is, going through a corrective phase. So I think if the stock manages to surpass that 60 level and close above it, then it could, re-announce its breakout as such on technical levels. So that's going to be one very interesting feature for the stock. Indian Hotels has been a stock which has been buzzing quite strongly. So I think even on I would say short-term basis, I think the stock should be getting up for another 15 to 20% on the upside. I think if I'm not wrong, the all-time high for Indian Hotels, or at least the 2019 high for Indian Hotels, was approximately at 160, 165 kind of levels. I would sense that start of 2021, the stock should be heading back towards those levels. Piramal Enterprise, I think, is a surprise stock because look at the charts. It's been a relative underperformer compared to many of its other peers when you try and compare it with names like Shriram Transport and Chola Finance, etc. But surprisingly, I think this move for Piramal Enterprise has just come as a solitary move because the other stocks are not seeing the same extent buying. So I would sense that this should be more individual trigger for Piramal Enterprise, and I think if that's the case, then you should see the stock coming back to 1500, 1550 plus over the next couple of days. So again, I think it's a slightly high risk play, but I think Piramal Enterprise should be something which could be looked at from a shorter term view.
Okay, that's the view coming in on some of those buzzers in today's trading session. Meantime, Daljeet wanted to also understand where you stand when it comes to some of these consumption names. If we're looking at the retailers as well as these multiplex stocks, the hospitality names, all definitely have taken a bit of a beating or a bit of a change in sentiment, which is sad now with the news of the curfew, restrictions on travel, etc. So perhaps there will definitely be more caution, and that will restrict spending and be quite a dampener, especially during the Christmas New Year time.
Yes, I think we have spoken about this segment in the previous segment. We are cautious on this, but we still have a positive view on some of the stocks. Mainly, maybe not we are looking at PBRs of the world, but we definitely want to look at Avenue Supermart. Because we feel that they have changed their business model and they have adapted to the changed environment. So that is there. Then Westlife was always there in our portfolio. That has seen a sharp up move after re-rating because of Burger King coming in. Jubilant has been there in our portfolio for a very long time. So I think, for these stocks, probably there can be a few percentage points here and there every day movement because of the traders and all. But the story remains intact, no? So we will continue with their portfolio stocks. We continue with that theme. Jubilant is continuously evolving with new ideas, coming out with new products and new variants of their existing products. So all of that is actually showing that company is not just talking of their existing foray that we are only on-time delivery kind of company. Now they are talking of that we are giving you many more products and we can fulfill requirements of various customers at different price points and different tastes. So all that is in a longer term, that's a very good thing for the company, and that gives us sustainability of revenue stream as well as profitability. So we continue with that. Yes, this kind of restrictions of Corona, etc., will have an impact on the in-dining part. But in a way, it is good for the companies like Westlife and Jubilant because they have a very strong delivery mechanism also. So that helps them because if people are not going out and they are staying at home, then they'll consume some of these things more also. So it's you can look at both ways. No, you can say yes, lesser number of people visiting my store, but then more number of people getting it at home also is possible. No? So I think for longer term story, there is no change. We are positive in all of these stocks and we have them in our portfolio.
Well as Kunal, many thanks for joining in and sharing with us your outlook.